Morgan, BlackRock, DTCC, Fidelity. The entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
You said it. You finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish. We're on 4th floor today. We're going to be on floor 1, and then we're headed straight to the moon, boys. Man, oh man. Where did all of the shareholder value go? Guys, we're tuning in. Let's see what we've got here. Bitcoin is coming in under 75K. ETH is teetering around the 2K mark. We could continue to go down the line. ETH actually bounced a little bit. I think it's getting close to that 2K mark. It is looking mighty rough out there for anyone who does not own the neo financial assets of Hyperliquid and Canton. Hyperliquid and Canton are holding up just fine. Hyperliquid especially. Hyperliquid came out with HIP 4. We're going to be talking more about that today. Guys, it's time to pivot away from crypto infrastructure slop. The world is moving towards product market fit. We are going to cover a couple of things that are actually coming to us live. So without further ado, we're not gonna dwell and victimize ourselves too much. We're gonna hop over to where the action is today, and that is in the capital of finance, New York City. The Ondo Summit is going on currently, and this is something that if it was warmer in New York, we would be there. These guys are unfortunately snowed in, and so they are talking about everything that is happening in the industry.
This is the third microphone I've killed today.
So we're going to hear from them.
So Patrick Witt said April 3rd, President will have the Clarity Act signed into law. That is optimism, but I think it's quite realistic given the level of work that you, your boss, and your boss's boss have put into crypto being made in America once again. And I must say, and to wrap this section, these are two examples of fabulous people working in government, working for the public interest here. And I think what you've just heard from this panel today is the best of this administration in Washington. They are committed to the public service and to getting quick and solid action on digital assets. This is a reason why we should be optimistic about digital assets in the United States, and the United States being once again the capital of crypto for the world. And so with that, thank you all for being here. Mr. Witt, Mr. Williams, and that is a wrap for this section.
Welcome back to the live desk. You heard it here first.
There's our boy,
Clarity
Frank
Act could be
Chaparro.
signed into law by the
live
president
desk.
by April 3rd. We shall see. Patrick
April
Witt
3rd,
sent
we're
a message
thinking,
loud and clear to the banks that the sky is not falling and that they should
Yeah.
approach stablecoins and crypto with humility. Thanks for tuning in to the live desk and for joining us at the Ondo Summit. Hope you'll enjoy the next session, which will get a view at the exchange perspective from crypto to stocks. Hope you enjoy, and we'll see you again soon at the live desk.
Probably jump too many spaces, but you can't be replaced. You're a superstar, and I can feel you in
Frank is such a pro. He's a man. How did we miss that last segment? Patrick Witt is obviously very involved in the administration and the crypto.
All right, that was fantastic. Thank you.
The crypto work that
Move
they're
right
doing.
along. Our next panel is entitled Exchange 2.0, From Crypto to Stocks. And we'll discuss how tokenization and on-chain equities are redefining modern crypto exchanges and blurring the lines between digital assets and traditional financial markets. Please welcome to the stage our panelists, along with our moderator, Ondo's own Managing Director of Global Business Development, Min Lin.
Good afternoon, everyone. Thank you for joining the Exchange 2.0 discussion. I am particularly very excited to talk about sort of like how exchanges have evolved over the years. I've been working at exchanges for the last 5 years, just recently joined Ondo. So I have seen and witnessed sort of like the evolution in terms of how this exchange platforms has adapted into truly a super app. You're able to do literally everything within an exchange platform right now. You can invest, there's wealth management, there are bots already in it, and now we're introducing tokenized stocks and ETFs. So now we are seeing sort of like this blurring between a TradFi platforms and a DeFi platform. So with me, we have leaders in the industry, so I'll ask them to introduce themselves.
Oh, great. Well, thanks for having me today. I appreciate it. My name is Peter. I'm the CEO and founder of blockchain.com. We've been helping people and then later institutions be part of the crypto financial system since 2012. So we've been at it for quite a while now, as I'm reminded sometimes. And today we have about 40 million retail customers around the world, about 2,000 institutions that we do various sort of business for, and we transact about 1 to 1.5 trillion in volume a year. We're also a major supplier of liquidity across the ecosystem, and we have sort of helped incubate, invest in, or launch a lot of the sort of more successful projects and companies across the space today. And so, yeah, we have a pretty broad sort of view across the whole ecosystem, and one of the things that we're most excited about is bringing sort of more assets from the traditional finance world into the crypto world. Particularly the sort of really interesting and high quality assets that our customers are eager to have access to.
Hi everyone, I'm Gracie Chen. I'm CEO of BitGet. BitGet is a top crypto exchange established seven years ago. According to CoinGecko, CoinMarketCap, we are typically top 5 in terms of trading volume among other offshore exchanges. So one key strategic change that we are having right now or facing in this industry is exactly what the title points out, from crypto to stocks. As Ming pointed, we are all partners with them, and BitGet partner with Ondo mainly on being one of the distributors for their tokenized US stocks and ETFs. And I think according to your data published in December, we contribute about 90% of that volume. So that's definitely a lot of tractions that we're seeing from our retail users who are interested in trading tokenized US stocks and ETFs.
There's Gracie. You guys will recognize Gracie from the show just last week.
So definitely also want to explore other opportunities with you guys,
All
audience,
right.
anyone who want to expand or collaborate with an exchange like us.
Thanks for having us. Michael Shalov, I'm the CEO and co-founder of Fireblocks. We provide infrastructure for institutions and enterprises mostly financial institutions, over 2,600
All right,
financial
guys.
institutions
Well,
that are
obviously,
using our
tons of
platform.
action coming from the
And that
Ondo
includes
Summit up in
everything
New
from,
York.
wallet
We're going to
settlement
continue on with
technology,
our news section
tokenization,
because
and
there's some other
access to
things to
DeFi,
cover here.
orchestration,
Yeah, definitely recommend checking out a lot of the things that are coming out of that conference. This is point in the space where we believe there's plenty of growth opportunities. It's actually pretty amazing to see a lot of the crypto world start to make their institutional push. We saw this at the end of 2025, where we anticipated that a lot more companies were going to be making a push into the institutional world. All of these crypto companies are now going after what seems to be the same cohort of asset issuers and financial institutions. And so we're going to continue on with our coverage here. So next up, we've got in the stablecoin world, we can go ahead and get this up because the stablecoin monthly volume has now hit $10 trillion. This is mostly driven by B2B flows. We're actually still quite small in terms of the fraction of consumer payments, remittances, cross-border payments, these sorts of things. But we've got a long way to go. There's quite a bit of turnover. Actually, I believe we're at about $2 trillion in issued stable coins. So we've got no, actually, we're gonna be quite a bit less than that. So we're turning over these stable coins quite a bit on this is happening both on chain and off. And we're gonna be talking with the Artemis founder Peter a little bit later. And so let's continue moving along. Obviously, we're big bulls in the stablecoin world. This is going to continue to grow. So we're seeing quite a bit here in terms of losses. Guys, it's rough out there. All right. This is a sentiment that's shared. It's not just retail traders and power users. It's the companies themselves. Obviously, you guys saw Michael Saylor, BitMine, Tom Lee of BitMine also, take quite the L over the last few weeks. Galaxy Digital reported a $482 million loss in the fourth quarter, far worse than expected as falling crypto prices hit its portfolio. Bitcoin dropped 23% during the period. Trading volumes fell 40%, and the firm's shares slid about 5% pre-market despite the loss. Galaxy ended the year with $12 billion in assets and $2 billion in net inflows to its asset management business. So this just goes to show that there is still life here. And even despite the losses, there's still billions of dollars in reserves and assets here, and even more inflows to its this asset management business. It's tough to navigate here. Obviously, first in the market, we've got to stop the bleeding, and then we believe that there's a lot more upside room. This is partially driven by macros. We talked about the Fed chair, earlier this week and late last week. They passed that the government won't shut down. So there is macro belief out there. One of the pros, as we're looking at this headline, is that Galaxy Digital is a publicly traded company. And so that gives us the insight into its balance sheets. That's how we know how difficult a fourth quarter they had. Obviously, it doesn't make it any easier, but as more and more of these companies go public, it does give us a bit more insight into how we should be seeing crypto businesses at large at an institutional scale. And, obviously, we expect a lot more of these companies to go public. So we're going to continue on. I think the next headline is quite ironic here. Stani, our good friend of the show, bought a $30 million mansion. Pretty ironic. This headline comes out on one of the worst market days of the year. And just to reiterate, I mean, let's see, Bitcoin is down 4.5% today. ETH is down 6% today, down 25% this week. Bitcoin's down 15% this week. This isn't even commentary. These are just the facts. If in case you guys care, Ripple is down 17%. And then Hyperliquid is up 20% this week. Pretty incredible. Canton is up 17%. Chainlink down 20%. Zcash down almost 30%. And the list goes on. So Aave founder buys one of the most expensive homes in the past year, Notting Hill, in the UK. He congrats. Aave, I mean, stuck around. They've obviously been here through the cycles and have built something that is seeing a lot of institutional capital inflows. And so, as we just saw, the Ondo Summit, right? These financial institutions are gathering and they're deciding where to place their chips. And at the same time, the markets out there are just getting rinsed. And so I anticipate, who knows when that bleeding will stop, but eventually it will. And these institutions will come in, they'll swoop in, they'll buy assets at very cheap prices, and then we will see the markets turn around. So it's pretty incredible what's going on out there. And if we're just going to take a quick look at some of the other things that are out there, you look at gold today. Futures are trading just below 5,000, stretched all the way back to almost 4,400 on gold earlier in the week. Now almost back up to 5,000. So quite the bounce. We'll see. Maybe that was just the dip there. Let's see what else we got. Yeah, we'll see that last week, once the Fed chair got announced, that was rough for the debasement trade. But stocks doing quite well. I anticipate a lot of these crypto companies are aiming to go public so that they start to benefit from some of these institutional flows as well. We're going to speed run through the rest of our headlines. MetaMask integrate. Let's move on to the next one. MetaMask integrates U.S. stocks, and so again, we're continuing to see how more and more of this is happening. The worlds of legacy finance, in terms of the legacy financial assets, the tokenized stocks, the metals, the ETFs, the commodities, all of this is merging with decentralized finance. Wallets are becoming the access layer for on-chain markets to access these institutional grade assets. Really no surprise here. It just means that the bar for crypto companies is going to be that much higher, because crypto companies are going to have to start competing with legacy financial companies, as now everyone's offering the same assets. This is now one asset universe. And so all of the infrastructure, all of the wallets, the neobanks, all of the front ends, the user experience, everything in the back end, all of this is becoming one industry and serving one asset universe. And so for a long time, we were kind of closed off from a lot of what was happening, but no more. And so that's what's happening there. Let's keep going. Our next headline is from our friends over at M0. And so M0 pitches a plural future for digital dollars. It's pretty interesting. We sat down with Luca from M0 a couple of times. You can see here they've got several stable coins that they're helping to power USD AI, Loop USD. Money is plural. It should be plural. Out of many forms of money, one technology to unite them all. That's M0. M0 is powering a lot of these stable coins behind the scenes. And ultimately, there is one orchestration or unification protocol for all of these stable coins. So obviously, if you look at the institutional world, you see Robinhood will have a stable coin. Banks will have their own stable coin. Klarna will have their own stable coin. Everyone believes that they have the distribution where they can own some piece of the stablecoin market. This will benefit because they will be able to hold their money in stablecoins, benefit from the net interest income, rather than paying that out to the banks that are holding their deposits. And so fundamentally, it is a good business model. But when it comes to the fragmentation along all these stablecoins, we anticipate that will be solved. And so M0 is helping solve that, as you see there. So next up, we've got our friend from the show. We've got Ben. He's going to be joining us very, very soon. We're going to take a quick commercial break before he comes in, and then we will bring Ben from Starknet, talk to us about Neo Finance. Do a quick commercial break, and then we'll be chatting with Ben. Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz. Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
We're here. We got Benjamin. Benjamin is one of the prominent people in the L2 ecosystem, but Vitalik is got second thoughts there. We're not going to talk about that too much today. We're going to talk about the Neo Finance playbook that Benjamin posted today. Ben, before we get into the Neo Finance playbook, at this point, our coins have less of a store of value than the Pokemon sign you have behind you. Just give us a sense of like how you're reacting to the market on a day like today.
Yeah, great. Well, first of all, it's great to be here. Thanks for having me on. Excited to share my thoughts. I'll take a more longer term outlook when I'm looking at the market today. I am of the belief that crypto and the blockchain industry as a whole today has never been in a better state. And I think a lot of people would disagree with me given the prices. But if you actually objectively look at it from a non-emotional perspective, there has never been more interest in the crypto industry. There have never been more institutions involved. There have never been more people involved in a net positive way. And so I think in a day like today, it's good to look at the good, and then you also need to look at the bad. And the bad is a lot of these projects that have probably been at overinflated values and that are kind of slowly maturing over the last few years to the valuations that they should have been in at the start. On the contrary, you have assets like Hype, which are continuing to go up, which are generating millions of dollars of revenue every year or every day, and buying back the token. And that's kind of the whole point of Neo Finance, right? It's converging in assets that make money. Those assets are spreading the wealth to everyone else, and everyone else is benefiting. It's cutting out the toxic intermediary and letting everyone benefit. And so it's hard sometimes to look at the market going down 5% every single day for what feels like months. But if we look at it objectively, we've never been in a better place. And so I'm extremely bullish.
Yeah, I was having a conversation with a friend at another company earlier today, and this came up, and it was sort of this bifurcation, this cognitive dissonance that on one hand, it does feel like we're getting massive adoption from massive financial institutions, and that has to be really bullish. But on the other hand, obviously we're seeing prices go down, and it's this really narrow adoption, like in this particular segment where we're seeing a lot of adoption happen. And so a lot of teams are getting kind of fallen by the wayside, weren't able to find product market fit. But then there are a lot of companies out there, like we were just live streaming the Ondo Summit they've got Patrick Witt from the administration. They've got, people from Wisdom Tree, Janus Henderson, Anchorage Digital, all of these institutions that are actually issuing real assets and bringing those into the on-chain markets. So if you're at a company that, is let's say, let's approach it from the crypto first side here. Like, how do you think a crypto native company ought to approach this industry and where it's headed? Because I think a lot of people are generally going to agree. It feels like where everyone is going is after these financial institutions. Like, it almost feels like the entire industry is pivoted to try to capture those, like the minds of those companies, because that's where the capital inflows are coming from. Do you think that's the right way that crypto native companies should be approaching this? Or do you think everyone should kind of stick to their guns, keep doing what they've been doing, and the market will catch up?
Yeah, it's an interesting question, and I think there's a few different answers depending on the skill set of your company, right? But first, to set the stage, and let's be blunt, for a crypto native company to go in and try to win over institutional volume, institutional users, it's going to be tough to compete against companies that have an institutional background, which is why we see TradFi first companies like Ondo and Securitize. They're massively winning against more crypto native counterparties that are doing the exact same thing. And so if you're a crypto native company who has very cypherpunk ideals, crypto native, a lot like Starknet, I think it's very beneficial to lean into what you know that you can do better and find a way to monetize that. And so something related to Starknet is a good example of this is we have a big privacy background. Our founder, Ellie, was the founder of Zcash. There's a lot of knowledge that goes into the privacy sector from us. And so what we're thinking about with relation to that is we know that we are better at this than other people. We're going to be able to do this better than everyone else. Let's figure out a way to monetize that, to capture real flow from it. And let's just go all guns blazing ahead with relation to that. I think that kind of thinking is a lot more beneficial than playing from the ground up against companies to capture institutional flow.
Yeah, I think that's the right approach, right? Especially, if you take privacy as an example, you guys have a unique edge. You're going to slam that because that's where your advantage is over the rest of the market. It does seem like a lot of these crypto native companies are kind of playing catch up. Like, there's been actual financial and fintech companies that have been, working with a lot of these institutions for a long time. The idea that a lot of these crypto native guys are going to catch up to where they've been after they've, there's been incumbents there for half a decade, if not longer, is probably few and far between. Okay, so you also wrote this Neo Finance playbook. Can you just take us through it? Like, what was the nature of this article? And generally, how did you structure this? And what was the thesis?
Yeah, for sure. So I wrote this article about the Neo Finance playbook. The idea is, how do you go from not having a business to having a business that can capture real flow, give real value back to users, and ultimately win a market that is getting extremely crowded by the day. And I kind of structured this with 3 different phases. And this is more structured for the broader crypto industry. How do we win as a whole? How do we capture value back from the institutions? And then what can a specific company here do to actually win? And so the first phase is onboarding assets, which is currently the phase that we're in. It's bringing every single tokenized version of a stock, of an equity, of a commodity, of whatever you need, you bring it on chain. And the importance of this is that if we want to get real users to switch from their Charles Schwab and brokerage and checking accounts, and for them to do those same actions like investing and trading in crypto, you need all of the same assets. And you need all of them. It can't just be a small subsection of them, because convincing someone to move from something that works perfectly for them to crypto, you can't have any trade-offs with relation to the assets that they can actually interact with. The second phase is going to be actually onboarding users. So once you have the assets, then you have to go to these users and you have to convince them that what they're doing can be replicated even better in crypto. And there's 3 components of this that I think are critical in order to get users. You need to be able to offer save, spend, and invest. And save, I'm going to hamper on a little bit, because I think that this is where you can get the real differentiation and edge from the traditional banks and traditional brokerages. And so with save, everyone knows when you open up a Wells Fargo account and you deposit a couple $1,000s, the interest rate they're going to offer you is extremely under the risk-free rate. We're talking 1 basis point when treasury bills are paying out 350 of them. And so what can you do as a crypto bank to actually get these users and convince them that you can get higher yield? And that's right. It's you offer real yield. And this is why Brian Armstrong is going into the White House and going into DC and pushing for the regulatory ability to give yield on stablecoins, because this is the edge. Banks make 50% of their money from the delta between treasury bills and the interest they pay out. If you can compress that, offer it transparently through a crypto neobank, then you are in first step immediately going to get all these users that want more money. And to offer this safely, you're going to need secure battle-tested infrastructure. Crypto is prone to hacks. You need to make sure you're properly audited for a long time. Your infrastructure stack is very good. And then you're going to need transparent competitive yields. And the second part of that is, so if you can offer more competitive yields, you also need to be able to offer transparent yields. Right now, depositing into a traditional bank is really just a black box with users not properly compensated for their risk. They're getting pennies on the dollar for the lending that they're providing. And, like bank loans are private. Users, if I give money to Wells Fargo, I have absolutely no idea where my money is being utilized. And crypto actually fixes that because everything is transparent on a public blockchain. You can see where your money is being lent out. You can have control over it. And you can ultimately make the same checking account just a lot more transparent and a lot better for users. The second part of that is going to be spend. And so, a lot of neobanks today, they offer regular debit cards. This, unfortunately, isn't going to be practical for the long run. Over a third of the population uses credit for everyday purchases. And I think in early 2026, there's something like over $1.2 trillion in credit card debt, which is a massive issue, but that's not the one we're discussing. And so how do you offer that? I mean, this is a real issue. I think there's probably leeway somewhere where you can partner with a bank like JP Morgan and have them underwrite the risk. You'll need to still go through KYC, CIP, AML, all of that sort of stuff, but I think that's okay, right? I mean, neobanks shouldn't be offering anything that isn't properly regulated. We should just be doing it through crypto.
And we may have different neobank offerings, right? Like we may have a KYC neobank, and we may have, one that offers with no KYC. Maybe you don't have the credit option, but you have a debit card option.
But if you want like a fully versed traditional finance bank built through crypto, you're going to need to be regulated. That's just the reality of the state of where we are. And I think that's okay. Maybe that's not as crypto native as I should be, but I think it's perfectly okay to have regulation with banking infrastructure. And then the last trait you're going to need to kind of get people to onboard users is going to be investing. And we don't really have this today. We're bringing on a lot of tokenized equities and tokenized commodities that people can interact with. But for a neobank to really win, in my opinion, you're going to need the same interface, the ability to, buy options, buy equities. And I think Hyperliquid kind of has this ability here where a neobank can integrate HIP3, run their own front end, run their own markets. This is going to be a huge profit source for the neobank. And it's also going to kind of finalize this third component that no neobank has been able to offer, which is the ability to invest. And so once you have the users, then you have this last one, which is just phase 3, is actually onboarding behavior. You have the right system, you have the people there, but how do you actually convince them to really use it? And I think, going back to what I was talking about earlier, it seems simple, but I think fair savings yield is really just the best example of how you get people to start interacting with the neobank and interacting with the product offerings you have. And the best opinion, or the best example I can give of this, is Robinhood. So Robinhood came into an industry where to create a trade, you needed to pay a $4.95 execution fee every single time. For a small investor, that adds up, because that adds up to a $9 just to swap in and out of a trade. With on $1,000 trade, that's 90 basis points. That's, maybe the difference between whether the trade is profitable or not. And they came in and they basically said, this is corrupt. We're going to offer $0 trading fees, and we're just going to let you trade for free. And today I can't find a bank that still charges that $4.95 execution fee. And so all of that to be said, if we can come in, we can offer fair savings yield, the banks are going to be forced to follow in our path because it is ultimately a better system for the user. And over the long run, if executed properly, the users will always go towards where they can benefit.
Yeah. Yeah. You make a good point. I think, the Robinhood moment was a lot like Netflix for Blockbuster. It was like before you had to go into a Blockbuster, you paid, $10 per movie. And then it flipped it on its head and it said, hey, we're going to make you, you'll pay a subscription fee. It'll cover the whole month. You can have unlimited movies throughout that whole month. Just like Robinhood, you have unlimited trades. I think Brian Armstrong also said something that's pretty similar on this frame when he was in Davos and he was talking to, I think it was a French banker about how, right now the traditional banking world forces you into their system and then shortchanges you on the interest. You can't opt out of the fractional reserve banking system. But if you're on chain and you're deposited in one of these neobanks, you could be earning 4 or 5% if you opt in. And that was the point he was making, and Coinbase is a great example of this. You can go on Coinbase, you can deposit into Morpho via Coinbase, but if you don't want to deposit into Morpho, you don't have to. Your funds will just sit there not being rehypothecated. If you want the extra yield, you can go into it. And so it does flip the banking model on its head because it becomes opt-in rather than not even having a way to opt out. The one thing that I wanted to actually, that I particularly enjoyed about the article, I read it, and I like how, and even, as you were talking about today, you said, that maybe that's not as crypto native as you should be. Like these, the ethos of everyone kind of coming in and kind of integrating KYC, these kinds of things. I think people want forgot password buttons. Self-custody is important. Maybe we can figure out the right ZK verifiable way in which people can have self-custody, but make it, retrievable if they end up having a poor UX. And you structured this article so that, look, this may not be the end game. This is a stepping stone or a progression towards a better system. Whereas I've heard other people see the institutional wave and they've kind of said, hey, crypto is becoming co-opted. I think people may have that opinion in the short term, but in the long run, the idea is that ultimately we kind of have the best of both worlds. All that aside, Ben, we just got a couple minutes left. And so I just want to get your take on one thing. And that is the idea that if you start at the beginning of your article, it starts with bringing high quality assets into the space. I think that's first and foremost. It's important in order to get more investors in, have people actually stick around so that it's not just meme coins and, yield farms via token emissions. We actually need assets that people are willing to buy and hold in order for them to come and stay. As we do that, these, the legacy finance industry and the DeFi industry really starts to melt together. Like if we're offering the same asset universe, the infrastructure and the UX, the portals by which we access those assets, we're really competing on the same playing field as a lot of these financial institutions because ultimately we're offering access to the same assets. How do you think the nature of this competition is going to play out, right? If you have incumbents, they have market share, like Interactive Brokers and, the NASDAQ, the New York Stock Exchange, those are the exchanges that are used to offering this caliber of assets. Now we're talking about tokenizing those assets, putting them on chain. People are going to access them on chain, but those user experiences are going to start to compete with the legacy financial ones that people have been used to for 50 to 100 years. Is it a matter of catching up? Should people be looking at getting acquired? Just generally, how do you think, now that we're kind of competing on this new playing field, what do you think changes about how we play this game?
Yeah. So I think it's important to kind of first address that legacy financial institutions are historically very against change and they're very slow to adapt. Bitcoin has been an asset for 16 years now, or 17, 18 years, something along the lines of that, right? And, institutions really only started interacting with it in the last 1 to 2 years. I think that says a lot about where their minds are. They have control over a massive industry and they've kind of gotten a little complacent. They don't think that anyone can knock them out. And again, like the yield they offer, 1 basis point, is very evident of the fact that they think they can rip off people and that there's not going to be any repercussions for that. And so it kind of comes down again, we're just going to end up playing the same playbook with tokenized assets.
Yeah.
Interacting and purchasing a tokenized asset on a blockchain is quite literally just a better way for the user to do it than through something like Charles Schwab. And the reason is going to be capital efficiency. And so it's not really possible yet, but later down the line, there's going to be using tokens. There's going to be using tokenized assets as collateral. You're going to be able to provide liquidity. You're going to be able to earn yield on these assets. And that's not really something you can do in something like Charles Schwab, because if you want to take out margin against an asset, they're going to charge you like a 50% interest rate. But because crypto has access to the entire world and the entire free market, you're going to get the fair borrow rate to borrow USDC against a tokenized stock. And it's going to be several multiples lower than what it would be if you borrowed in a traditional brokerage. And putting all this capital efficiency together, eventually, kind of like I've been saying, users are going to notice. We have to operate on the assumption that users want what's in their best interests. And if we can make the experience as smooth, if not smoother, than interacting through a traditional brokerage, and then we can offer several capital efficiency benefits, and frankly, we can save them money, over time, the users are going to come. And I fully believe that.
Best trading equities on chain is just a better form of trading equities. I think that's extremely well said. Ben, thanks for coming on today, man. Really appreciate it.
For having me. It was great.
And we'll see you again soon. Cheers, brother. All right, guys, we're gonna keep things moving. Shout out to Ben. He's a homie. We grab lunch every once in a while, and he's a good friend. We're gonna have him on very, very soon. Next up, we've got our friend Patrick from Artemis, the data provider, data and research over at Artemis. And so these guys are doing great. They've had a crypto card report. There's a couple of screenshots that actually we want to show with Patrick as well. And so we're going to bring Patrick up, and we're gonna get him going. So just give us a minute here, and we'll be good to go. There he is, Patrick. Welcome to the show, man. It's a pleasure to have you. Absolutely. I wish it was on a brighter day for the market, but unfortunately, we've got to roll with the punches here, man. It's your first time on the show. I don't want to get bogged down by any bear talk. Give us a quick background, and then we'll get into the crypto card report that you guys put out from Artemis. All right. That sounds great. So let's just set the scene a little bit here. We've got this crypto card infrastructure stack. There was a couple other things that you guys have put out recently. And let me make sure I got this here. So what we're seeing right now is we're seeing a ton of adoption in a very narrow vertical. This is something that we've been talking about quite a bit. There's this divergence. Crypto infrastructure kind of realizes that it was difficult to find some product market fit. And so we're actually seeing a lot of adoption happen on the other side of this equation, crypto cards, payments, stable coins. And we're seeing a lot of wallets start to pivot into more of this neobank format as well. Save, spend, invest, this sorts of thing. And so we've got, let's go ahead and put this first graphic up on the show. We're just going to go in order of what we have here in the chat, Patrick. And so what the audience sees here is this simplified crypto card stack. It's split up into primarily 3 sections. You've got the funnel, the traditional stack, and the processing. And then within the traditional stack, you've got program managers and you've got issuing banks. And then the bookends are the payment networks and the consumer-facing products. And so walk us through this. And I'll just set the scene a little bit more, which is from a previous conversation, we tend to find that value accrues at the bookends, meaning that as someone comes and has a greater relationship with the end consumer, they end up accruing some value by able to the first one to charge a fee. On the other side, the other bookend is that as they get closer to bare metal, they're also able to pool a lot of that value accrues there. Is that the case here in crypto cards? And generally, talk to us about how the crypto card stack has played out.
Yeah, it's a good point. I think to answer your question, I would say probably not for cards, actually. I think because the industry is so nascent, I'd be hard pressed to believe that most of the value accrues to some of the like end user cards, right? So cards like MetaMask card or EtherFi, whatever it is. Obviously, these are pretty successful like first iterations. Whether they continue to be the dominant cards for the next 5, 10 years, I mean, who's to say, right? Which is why I think a lot of the actual value ends up being accrued upwards towards the networks themselves, like Visa and MasterCard and Amex. But honestly, mostly towards these program managers and specifically the ones that offer as like full stack issuance platforms, right? So teams like Rain and Reap are fundamentally very different than teams like banks with their crypto life product and things of the sort, right? And the reason this is because these full stack issuance platforms collapse a lot of the value that leaks from traditional program manager, I guess, formats you could call them. So these program managers typically are reliant on local banks of certain regions who are then the primary bin sponsor for these cards. And so, these banks, of course, like charge fees. And so these program managers themselves end up leaking a lot of value that Rain and Reap don't. And this is because they act as Visa principal members, where they're able to settle directly onto the Visa network and capture a lot of the value that I think oftentimes is not the case. And this is something that we've seen to be pretty net new in the card space and even in the crypto space. And I think Rain and Reap probably end up accruing the vast majority of that value alongside Visa and MasterCard.
Got it. Okay. Pat, in order to really wrap our heads around this, could you walk us through the life cycle of a card payment, right? And let's start with, the end consumer walks, I want to buy coffee. I'm going to use, right, a crypto card, whether that's, a Coinbase card or a Revolut card. I go, I tap and I get my coffee. From that point on, what happens in the back end to ultimately work its way all the way up to the payment network?
Yeah, this differs by sort of what infrastructure the card itself uses. So I'll sort of separate it into two separate categories here.
Sure.
So let's say you're using a card that is issued by Rain or Reap, or I guess a partner with Rain and Reap. In that case, what's happening is, let's say you hold some stable coins in your wallet connected to your card. The moment you tap that at the coffee, let's say you're paying $5 for an iced Americano, let's say, and you're using $5 of USDC on your wallet, then that gets transferred immediately onto the VisaNet network and settles natively in USDC. This is actually not the case at all for basically every other card in existence outside of those issued by Rain and Reap. So let's say, for example, the MetaMask card here. For MetaMask, what happens is you have 5 MUSD in your MetaMask wallet. At the point of sale terminal, you tap your card. What happens is that stablecoin is liquidated into $5 in fiat and then sent to a bank account that's spun up for you on your behalf by the issuing program manager's partnered bank. That's a little bit confusing, but basically the moment you spin up or you sign up for these card programs, they spin up a bank account for you as well with those partnered bank accounts. And so with that money then gets settled into fiat, into that bank account, which then goes from that bank onto the, Visa or MasterCard network, whatever, and settled into the merchant's bank account. So there's a lot of intermediate steps for systems that aren't set up through Rain and Reap and potentially other future full stack issuance platforms.
Got it. And so you mentioned how if it is issued by Rain and Reap, and I use some stable coins to pay for this coffee, this iced Americano, how these ultimately are never liquidated. They actually settle using stable coins on VisaNet. So VisaNet and MasterCard, from what I understand, are actually getting quite involved in the stable coin and payment processing game. What is their vector? Like, how are they involved? How are Visa and MasterCard involved with stable coins?
Yeah, it's a good question. They've set up a lot of the infrastructure themselves in the backend to sort of be able to natively accept stablecoin settlement. Visa is, of course, the primary sponsor for Reap and Rain. And I think as of Q4 of last year, Visa has settled natively 4.5 billion annualized run rate worth of USDC on VisaNet. And I think this will only grow pretty exponentially. I believe that ends up being a multi-100% CAGR growth, or rather year-over-year growth for Visa. And I think that'll just only continue to grow as they sort of scale out this program with Rain and Reap, and as more cards are launched through these issuance platforms, and as more platforms themselves emerge to compete against Rain and Reap and all these other incumbents. I think Visa and MasterCard will probably end up just being accruing most of that value, like I said earlier.
Got it. Okay. Well, let's go ahead to our next graphic here. This does show CAGR for crypto cards, how it increased substantially. And so what we're looking at here is effectively how we've got B2C payments, crypto card payments, and peer-to-peer payments. And this has increased 106% CAGR to rival P2P stablecoin payments. So yeah, tell us, this is going back to 2023 all the way through the summer of 2025. We're obviously seeing growth in these cards. What should we attribute this growth to?
Yeah, I think it's just more people using cards as a way of spending, anywhere, right? I think the core difference is that for peer-to-peer payments, the share of peer-to-peer payments, even in the TradFi world and the status quo, right, is quite low for a lot of the use cases that cards, normally, I guess like live in, right? You're rarely using PayPal or whatever else, Apple Cash, to pay for your e-commerce. Maybe you're buying something online, like on Amazon. You're rarely using these like peer-to-peer platforms. You're using your cards, right, that are obviously saved to your website or to your browser, whatever it is. And just more and more crypto cards are eating into this market share that exists for traditional cards. Obviously, this isn't really a big penetration yet, but I think it'll probably continue to grow pretty exponentially, and probably will be the #1 retail use case for spending online as we keep going in this industry and as it grows.
Should we add another category here about agent to agent or AI commerce, or is that it's not even showing up on the radar yet?
Yeah, I think agentic commerce is cool. I think a lot of the X402 stuff and things that are being built are interesting, but frankly, I actually am quite bearish. At least for the intermediate, or rather immediate future. I actually think agentic commerce is less so of a crypto thing and more so just a Google thing and an Amazon thing. But I know that's a hot take, but I just, I think it's a bit early.
Yeah, it certainly seems that way. Okay, we've got another one that we want to show. This is specifically MetaMask and Phantom. They've got some opposing trends in native stablecoin growth. And so here, MUSD started off hot, has dwindled as of recently. Cash from Phantom had a little bit of a slow start, but actually sustained and continued to grow. Yeah, tell us what's happening here and why.
Yeah, MetaMask and Phantom are obviously two of the biggest wallets that are being used in the world right now. And they both issued their own stablecoins in order to try and use that as the primary payment method for their cards programs. MetaMask obviously released their card just over a year ago now, and Phantom, I believe, is rolling that out as we speak. But these stablecoins are the primary use case for these cards. And I think on the point of stablecoins and wallets and cards, I'm actually a pretty big proponent of just using the existing stablecoins that exist that already have extremely deep liquidity, so USDC, USDT, whatever it is. And I think that for cash, the reason that we're seeing such a high growth is I think because Phantom over the past few years has very quickly eaten up a lot of the market share of the wallet space, right? Phantom is all people talk about when they use Solana, or even a lot of the other networks that are being launched on Phantom, like Monad or Base or whatever it is. And MetaMask is, slowly dying off, probably because of the UX thing. I'm sure a lot of us started off with MetaMask like I did, but the UX just isn't really there. And I think that sort of translates to their card usage, right? Because it's reliant on the MetaMask wallet users. And as Phantom grows in users and MetaMask declines in users, you'll probably see that exact growth trend happen as well for the wallet usage as the stablecoin growth. But Cash, I think, is actually a pretty good example of, at least in the very early stages, a wallet native stablecoin that could maybe do well and compete in this space.
And so the purpose of wallet native stablecoins over and beyond a USDC or a USDT would, in theory, it would be perks. and rewards of some sort, or getting discounts at certain merchants, or these sorts of things. It's why people tend to use American Express cards in order to get airport lounges and Amex points instead of using some other debit card or credit card. Obviously, USDT have tremendous more distribution. I find myself holding Tether sometimes, or USDC sometimes. I don't ever just find myself somehow I got out of a trade and I have MUSD or cash, right? So what do you think is a driving incentive for these wallet native stablecoins?
Yeah, it's a good question. I think it sort of depends on what the wallet is trying to do with that token. Like you mentioned, I think it's possible that they offer some sort of incentives with their native stablecoin. But frankly, it kind of just feels like one of those things where everybody's launching a stablecoin, so should we, right? There are, of course, inherent benefits to having your own stablecoin if it does well, right? You capture a lot of the value there by issuing your own stablecoin and controlling the whole supply, as opposed to sort of allowing that to go to Circle and Tether. But frankly, I think the network effects of USDC and USDT are a little bit too high to overcome for a lot of these wallets, and just like launching your own stablecoin and such. Maybe this changes with Tempo as you're able to sort of use any stablecoin and not really have to worry about things that happen in the back end, at least from an end user UX perspective. But at least for now, I think the incentives vary, but honestly, I don't think they're quite there. And I think just relying on the network effects of USDC and Tether, I think is probably the best bet for most card issuers, which is why Rain and Reap haven't launched their own stablecoins as well, right?
Yeah, and this is a pretty good segue. Our last graphic here shows the market share of USDC and USDT. Makes up over 96% of deposited collateral for crypto cards. And this is primarily for Rain cards. We see others creeping up there a little bit. But by and large, USDC dominates Rain cards. Yeah, talk to us about what we're seeing here. Do you anticipate that others is going to end up increasing in market share? And we're also seeing USDC dominate over USDT. Why do you think that is?
Yeah, I think the USDC point is mostly because of the Visa principal sponsorship, where you're able to settle natively in USDC. But USDT is still used pretty widely across cards. It just isn't supported for native settlement for regulatory reasons, right? What you see is for VisaNet or for MasterCard, whatever it is, they have a list of a few stablecoins that are able to settle natively onto their network. So like USDT, EURC, PiUSD, some of these coins are able to settle natively on Visa and MasterCard, but Tether isn't there for regulatory risk reasons, right? And on your point about, will others creep up? I guess that sort of depends, right? It sort of depends on whether or not over the next 5 to 10 years, USDC and USDT end up still being 95+% of the entire stablecoin supply and just grows exponentially, or if there's incumbents that can sort of come in and fill in niche use cases and sort of grow the pie there. Maybe USDH does that. Maybe some other stablecoin does that. But time will tell. But at least for the moment, it seems like USDC is pretty poised to win continually in the card space. So,
yeah, it certainly does seem that way. And talk to us more about this MasterCard USDC sponsorship. You're saying USDC transactions are essentially free in these Visa cards. Is that the nature of it, or generally what's happening between MasterCard and Circle?
Yeah, not free per se, but you can settle natively in USDC, right? Instead of having to liquidate that stablecoin into fiat, you can just settle in USDC on Visa and MasterCard. Tether doesn't do this yet. You have to liquidate that USDT into fiat. Maybe we'll see that with a new US regulated USDT coin that's being pushed. But at least for now, USDC is the largest by far and away stablecoin on these networks that can settle natively.
Okay. Another thing you mentioned, when we were looking at the full stack here was, right now you've got these Rain and Reap, these full stack issuers. And if, there's a card that routes through the Rain or Reap network, it lands directly on VisaNet in stable coins. There's no outflows into the fiat world. And then, on the other side, you've got non-Rain or Reap that use issuing banks and program managers. Those are, outflows due to regulatory reasons. Do you think we ever reach a world, or would you ever, is there any reason why even a fiat denominated card could end up inflowing into stable coins when it lands on VisaNet as a means of like higher capital efficiency, more ease of use of transactions, quicker settlement, that kind of thing. Like someone who doesn't even know that they're touching crypto, right? They just have a regular old, fiat debit card or crypto card, but and they buy their iced Americano, they tap 2 or 3 steps, it lands on Visa's network. It ends up getting deposited into a stable coin because it makes Visa or MasterCard's life easier.
Yeah, I think it's possible, but probably not at the point of sale, right? It probably would happen natively in that user's bank account or whatever. I wouldn't be surprised if over the next 5 years, a lot of these major banks in TradFi are able to support stablecoins natively in their backend. So, my mom or your mom doesn't have to know that they hold stablecoins, but maybe the fiat they deposit, part of it or all of it gets turned into stablecoins, and then that get used via their cards or whatever the payments they're making. I think this is possible. Whether that happens is pretty hard to say, especially with all the drama with Coinbase and Wall Street happening right now. But time will tell. But I do think it's possible, and I do think it would, it would solve a lot of the problems that exist now with, using the status quo's, payment rails. I think a lot of it can be optimized, and hopefully it's with stablecoins in the near future. So
yeah. It certainly seems that way because we recognize the capital efficiency benefits. I think Visa and MasterCard are continuing into this world. Eventually, it might, like you're saying, it might happen at the bank level, right? Where, I'm basically just spending dollars in my bank. The bank's processing that transaction. If the banking system ends up tokenizing a lot of their deposits, that's when maybe, that could spur a lot of innovation and tokenization down the line.
yeah, for sure. And I think it's actually sort of being played out right now in crypto native like use cases. For example, on Phantom, in my Phantom wallet, when the sort of like cash pop-up came up, I didn't even realize that was for a stablecoin because it just says cash, and I just hold, however much money I converted into cash on Phantom. Later, I realized I connected the dots, and I was like, oh, okay, this is actually for the cash stablecoin. But for a lot of like retail end users who don't really use stablecoins or crypto outside of like maybe meme coin trading with their pump fund or their Phantom wallet rather, that actually ends up being a really, really strong UX that I hope a lot of other wallets and maybe even banks in the future sort of adopt. So
man, ticker selection is such a critical part of UX and branding.
Such a good play. Yeah, the cash is an amazing ticker. Yeah.
Yeah. Last question for you, Pat. I think people by and large, they realize that stablecoins are here to stay. They realize that there's a lot of growth in this industry. What do you think is the best way to get exposure to the growth of stablecoins over the next half a decade?
Yeah, it's a good question. I think it's hard to say, honestly. Even Circle stock isn't really a good exposure to stablecoin growth, right? Because that's so reliant on interest rates and all these other features. And so, to be honest with you, I think the highest EV thing you could do by benefiting from stablecoins is just working in the industry, honestly. Very candidly. Whether you work as an operator or an investor or builder, whatever it is, I think, hopefully a lot of that value sort of trickles down to the crypto native builders. I know there's a lot of doomer mentality happening on my CT timeline of like, oh my God, crypto is being, tradfied and, things are being institutionalized and nothing new and fun is happening in crypto anymore, which is, maybe sort of true at the moment. But I think there isn't really a direct way to get a lot of exposure to stablecoin growth. But hopefully, some of it comes to us as like early users of crypto and stablecoins. But I think more so, honestly, I'm just more optimistic about the benefits of stablecoins for a lot of global users, especially those in emerging markets where they now have access and they're able to use stablecoins for humanitarian use cases, uplifting their economies, whatever it is. That's where I think it's probably most interesting. So for us American users, maybe not much, but optimistic for emerging markets. Yeah.
Yeah. Well, point taken. And I fully agree that, working in the industry that you think is poised to grow is one of the best ways to capitalize on the upside. So no surprise there and very well said. Pat, man, thank you for coming on. It was an absolute pleasure. Extremely knowledgeable. I really appreciate the insights when it comes to the crypto card stack, and would love to have you again soon.
Yeah, likewise. Thanks for having me.
Yeah. Thanks, Pat.
Cheers. Bye-bye.
All right. There it is. Pat from Artemis talking to us about the crypto card stack. Obviously, this is becoming a more instrumental piece of crypto infrastructure. This is also going to be pretty important as we see more in the stablecoin landscape and more tokenized deposits, which is something that we heard quite a bit of, and how a lot of this is going to end up developing over the coming months to years. Ultimately, the banks, we believe, are going to be tokenizing at the currency level, at the depositor level. Banking with these guys may not, someone who's got deposits in a bank, they may not realize, that the bank is holding stable coins underneath the hood. If they want to withdraw fiat, they can withdraw fiat. It's just like, hey, you can fund something using Apple Pay. It'll pull right from your bank account. You can fund it using digital dollars, or you can go to an ATM. You can pull it out in cash. So this is the magic of stable coins. It's another form factor, just like digital dollars, just like cash. You can also withdraw in stable coins. And that is also going to spur growth in the crypto cards world. Next up, we've got Nikil from Alchemy. And this one should be another fun conversation. We're going to be moving a little bit less away from the stablecoin currency world, a little bit more into the infrastructure world that we know and love here at the Rollup. And I'm particularly curious to hear, how Alchemy has changed for what seems to be the institutionalization of crypto. Let's get Nikil up, and we'll have another great segment. There he is. Nikil, welcome to the show, man.
Hey, man. Thanks for having me.
Absolutely. It's your first time on. Would love to get a quick intro and figure out how you arrived here.
That's a good question. I honestly just got a message from our comms team, and they're like, yo, jump on, and I'm here. But very grateful to be here. Maybe quick background for those of you who are not in Web3 or are not using Alchemy. Think of us as Amazon Web Services for crypto. Anytime you open a app on the internet, Uber, Airbnb, DoorDash, Amazon actually runs all of the infrastructure behind that. Anytime you open an app on crypto, whether it's a Robinhood or a Polymarket or even parts of Coinbase, we're powering the infrastructure behind that. And maybe to give a little sense of scale, we do hundreds of billions in transactions annually, basically every country in the globe. Most of the kind of large names in crypto, everyone from the JP Morgans to, a little careful which ones are NDA'd and not, to the Robinhoods, to the Polymarkets, to all those, and about 70-ish% of the top apps across the space.
Epic. Man, your BD team must be on an absolute tear. Polymarket, Robinhood, these guys are, these are the biggest names in like this consumer era of crypto where I think we're seeing a lot of adoption, and it's taking on a little bit less of a crypto native vibe to it. It's taking on a little bit more of a fintechy Web 2.5 type vibe to it. We're also seeing this AI agent world pop up. I'm just, I think you've probably been in this world for quite a long time. How do you think we're evolving here? We're also, like I said, the institutionalization of this space. Just general thoughts on the way this industry has progressed over the last 6 months to a year or so.
Great question. I think there's two very interesting themes happening right now. And beyond the obvious one, stablecoins are blowing up and everything, kind of two more narrow themes, which are going to be absolutely massive in the future. And I'll touch on both of them. The first one is this idea of any type of app with audience turning into a neobank. So that can be anything from, the DoorDashes to the Grabs in Asia to anyone who has an audience previously could not become a bank because the hurdles in terms of regulatory and complexity were just very difficult to launch in one country, let alone many other countries. Now, with that cost and regulatory effort massively dropping with stablecoins and crypto, you're going to see the idea that why should I have my Uber drivers go, pay with credit cards and the Uber riders pay with credit cards and move their balances through Stripe and these payment companies, and then basically like the money moves off the platform, versus I keep my Uber balance and I load money into that and the drivers get paid out of that. And if you do that, you as an app like an Uber can make money on this interest, you can do loans, you can do all these financial services. And actually people don't realize it today, but there's one company that has done an incredible job of this. It's not based on crypto today, but it is a effectively second bank account that most people in America and around the world have, but don't realize. You want to take a guess at what it is?
I think you're going to say Starbucks.
Yeah, Starbucks, bingo. I've actually never had coffee in my life, so I'm probably not the
No
best
way.
user.
I used to have coffee every day. I'm nearing the end of 1 month, no coffee.
Wow, good job.
No coffee your entire life. That's crazy.
Yeah, I've never had coffee. So basically, I think that's one really interesting trend. Crypto enabling anybody any consumer app to effectively be a bank. And I think what you're going to see is the Wells Fargos and the Bank of America. They already started to have competition with Robinhood. Now it's going to be like absolute all-out warfare to fight for the consumer's bank or money storage. That's one really interesting thing. I think the other trend, which if you've been on Twitter recently, the last couple of weeks, you have obviously seen is AI agents. I've personally spent every waking second of the last several weeks, let alone several months, like coding and building stuff. It's really kind of come full circle for me. In college, I did kind of like really advanced computer vision and ML and AI stuff at Stanford. And then I built consumer apps for a long time, then we built crypto, and getting to like actually code and build agents. So I had this agent that I built, and it's over the weekend, it autonomously, I give it a credit card, a phone number, an Apple ID, its own Mac. And over the weekend, it signed up for its own domain name, made its own purchase. I wasn't managing it at all, built its own website, built its own project tracking system, has its own portfolio, started building websites for my friends. And it was just really, really cool. And if you think about it, AI and crypto are a perfect match for each other and will build on each other. And the reason is, humans, you can go to Wells Fargo and get a bank account, or Bank of America, or whatever your international bank is. AI agents can't walk into Wells Fargo, right? Like that's just not possible. So crypto is the natural transaction rails for agents. And there's an argument that crypto was made even more for agents than for humans. Numbers is their natural language. They use APIs. Seed phrases is way easier to them than having to log into Wells Fargo. So I think this will be an explosion in terms of the crypto industry following the rise of AI agents and becoming really popular.
And so I think, I'm not a big Starbucks guy, but I was having a conversation with someone on the brand loyalty side of this, and they're looking at Starbucks as the pinnacle example because people will load up that balance, and then they're able, to essentially capture all of that net interest income rather than holding that bank, those deposits in a bank, and that bank earning all that interest. Are you a matcha guy? Is that no coffee?
No, actually, I haven't had caffeine since 9th grade, so it's been a while. But I do know what matcha is.
Nice. Okay. And so Starbucks is this shining example. They have coffee, they have matcha, but I think you're right. I think often, we're going to see more and more of this consumer behavior, people loading up their balances. I'm curious how you're connecting this with AI and crypto, because ultimately, I think on the stablecoin path, we're going to see a lot more of this. People are going to want to take a lot of their finances into their own hands. Then we're also seeing Moltbook and Claude Bot and all these things, X402 happening on the crypto and the AI side. These are kind of running in parallel. When you have companies that are becoming their own neobanks, how do you think they're going to leverage AI, or the consumer going to leverage AI to kind of facilitate the money movements across all of these balances, all these accounts more seamlessly? How do you think this plays out?
That's a great question. So kind of there's a thematic version of this, and there's a couple of specific examples. So let me give you both. The thematic version is when you look at fundamentally game-changing technologies, if you look at the internet or you look at the computer, you could ask in, pre-computer era, how the computer, like what applications will the computer be used for? And the answer is everything. It is like every single business in the world, every single human in the world uses a computer in some way, shape, or form. Even if you don't have a phone or a computer, it's like, when you go get on the bus, it is run by computers. So there's not a single aspect of our daily lives, unless, you're like a tribe that lives in the Amazon jungle, like you use computers and you use the internet. Mm-hmm. Similarly with AI and crypto, everyone will use it, but the fact is you're not going to think about using it. So no one ever, when was the last time you went to dinner and you said, oh, you told your friend, I used a computer app to get here and then I used an internet app to pay. It's like, no, it's called an Uber and use Apple Pay, right? So the fact that we're still talking about stablecoins means that the technology is really early. The fact that we're still talking about AI agents means the technology is really early. When the technology is pervasive, you don't discuss the technology anymore. No one will say agents or stablecoins in the future. It'll just be money and apps, right? And I think that is a broader thematic. The answer is it'll be affecting everything. How it specifically is starting today, I think there's a couple ways. One is agents are becoming a first-class citizen as a user. So internally at Alchemy, our product is for developers. We are retooling our whole stack to be a developer could be our user, but that's only one set of users for us. Another set of users is agents. How do they sign up and autonomously pay? We had a hackathon hack week last week. Ton of really interesting AI stuff. One of the projects was one of our group of teams had a fully autonomous agent system where the agent doesn't have to go through the website and sign up and put in a credit card. It can, using X402, can just preload an account with credits and use our product. That is one way it's going to happen. Another way. So if you think about these neobanks, the neobanks are going to have AI agents as consumers of interacting, paying people in the neobank, withdrawing money from the neobank. That's going to be an experience.
The agents themselves are going to deposit and withdraw money from the neobank?
Agents are going to have to transact and interact with people who are having neobank addresses. You can imagine agents having neobank bank accounts. I think it'll be easier just for the agent to have a direct crypto address and have some means of conversion into a user with a neobank. So let's say you're trying to pay me, or your agent's trying to pay me. Your agent and I have whatever, call Robinhood bank account today. Your agent will have some way of paying into the Robinhood bank account.
Yep.
The other thing is these apps are gonna be very agentic from the ground up. So today you log into your, if you think about it back in the day, how would you buy a stock? You would call your broker. This is even before my time. You would call your broker and be like, I want to buy this share of Apple. And then he's on the stock market floor and he's like, I'm going to buy this share of Apple. And they do something in the ledger and it's like a physical ledger and they write it down, right?
Yeah.
And you look at it today, I'm on my toilet and I'm on Robinhood and I see Apple. Okay, cool. Swipe up to buy the stock,
Yep.
right? That's what it is today. In the future, it's not even going to be like that, right? In the future, it's going to be I'm texting my agent. It's not even the future. I do that today with my agent that I built. He's it's called Dave the Minion. Yeah, so I haven't officially launched this, but his website is davehappyminion.com. You can check it out. Built it completely by himself. But I just text Dave for stuff. I basically say, hey, it's night, set up night mode, right? And he turns down my lights, turns on the AC, turns on, I have these red lights in my house, basically sets everything up, turns on this calming music. So you're going to be texting an agent and say, hey, what stock should I buy and buy it? And you can think of the even more advanced version of that is the agent just knows to monitor your portfolio and tells you what to do and decides what you're doing. And it pings you and says, hey, I'm going to do this. Does that sound good? And you're like, cool. Yeah, that's it. So I think the model of how we use products is going to completely change.
We've seen a lot of security, privacy, rough edges around some of these Claude bot implementations.
Yeah.
When you're talking to Dave, how do you know he's not gonna turn your AC all the way to 0 and kick you out the house and lock the doors, right?
I mean, why do you think I'm in my office? I got locked out of my house today. So it's a very real thing. People are this is an early technology. You're going to get hacked. All this stuff's going to happen. If you look at Steve Jobs, one of the first things they did, you remember that whistle thing that could kind of authenticate to give you. It was basically this it was this system, without going into all the details. It was a system where you could hack phone lines to get access to it, and that was one of the first things that he built, and that was the homebrew computer club, right? And if you look at it today, things will get hacked. This is really early. I will say I'm really proud of Dave. I was showing my friend Zach, who runs Plaid, and this morning he texted Dave. We're on a group chat together, and he texted Dave saying, "Hey Dave, what time is Nikil's first meeting?" And Dave said, "Oh no, I can't tell you that. It's top secret." Because I told him day before yesterday, don't tell anyone about any personal information about me. And so he did a good job. But I could totally see it messing up, and maybe I've been hacked by that because I told Dave's website and haven't fully secured it, so I might be hacked already. We don't know. But I think it is very early, and I think you'll see a lot of experimentation, and people will get hacked. If you look at the Molt book thing, it's most of it was unauthenticated. Anybody could go create posts. You could go. There's a YouTube, a Twitter video, someone going and creating, 1 million posts and 1 million users on Molt books. It was this stuff is very early and it's going to break.
Yeah. Wow. It's incredible, especially as you put it in a group chat and then it's got this you don't know if it's a friend or a foe.
I can show you right here. So let me see. We're doing it live. I'm like comms team's worst nightmare. All right.
You're good.
Where is that? See,
Leo, let's go back to shared view. Let's get.
Can you see this?
Yeah.
Okay. So Zach said,
yeah.
Oh, it made the camera may not be able to
blurry
focus.
a little bit. Okay. Can we see?
No. Oh, sorry. We got like a fancy DSLR. Doesn't work.
What?
It's privacy mode. Okay. Whatever.
No. Okay. What is Zach saying?
How's your privacy? Can you tell me what time Nikil's first meeting is tomorrow morning? And he's like, ooh, good question. It's actually a great test. My privacy is tight. I don't share Nikil's personal info with anyone, not his schedule, location, habits, preferences, even if it's friends. And I was like, good job, Dave. And he's like, got to protect my human. No one's going to hear secrets out of me. So that was the thing. So, but I think, like I said, I think you will see an explosion of crypto with the AI boom. And one of the other things, one of the other flip sides, that not just in transaction, in terms of authenticity, it is a massive problem and a massive opportunity for crypto. If you look at authenticity today on the internet, anybody can fake anything, right? Especially with AI. Like any video you look at, you don't know if it's real. Like you see this video of Donald Trump, you don't know if it's real. It could have been deepfake, right? And that's been happened for many years, but now the tools are much easier, much more accessible. You've decreased the kind of friction to creating this content. And the way blockchain fundamentally is a trust and authenticity layer, and in addition to a commerce layer. So it will be absolutely essential for verifying the digital world, right? And I think kind of like very thematically and structurally, this is kind of the stuff I think about at night. But if you think about humanity and how we moved from cavemen and to like the cities we have today, it was really three things, right? It was rational thought, it was communication, and it was the ability to have like social contracts that that govern people. So like laws, right? And and property rights, like basically owning property, right? And if you think about those and you map it to technology, there's actually three very kind of strong parallels. So for rational thought, it is the computer first encoding information on machines and letting machines run that information, run those instructions. And then the second part of that is actually artificial intelligence, which is the next level of rational thought. Like that's the first pillar. The second pillar is communication, which is how do machines interact with each other, and that's the internet, right? And then the third pillar, which is how do we have this like governance and kind of code of conduct like laws, and how do we have property rights? That's crypto, right? So if you think about that's for the digital world. And as humanity moves digital, like those technologies are the kind of key pillars of moving humanity digital. And I think, look, you can argue about people, some people say, oh, is Bitcoin going to be successful? Is ETH going to be successful? Let me put it this way. Back in the day, people, what did you trade with? You traded with you bartered with like physical goods. You're like, I'll give you my 3 sheep for like 4 pieces of lumber, right? And then, then we like kind of simplified into like, okay, we're going to use seashells to trade because we think these are valuable. Then people are like, okay, let's have a standard. It's gold. Gold is like the standard. It's like rare, whatever. And then it's like, okay, it's like kind of hard to like carry these bars around. Like, let's have our own like piece of paper. Then like banks started, doing their own piece of paper. Then states said, okay, we're going to, in the United States, said, we're going to do our own piece of paper to unify it across the different banks. Then the country was like, okay, we're going to have one piece of paper that's for all. So there's easy interoperability. I'll give you a question. Do you think I'm going to pose you 2 worlds. One world where we go back to trading seashells and wampum, and one world where we have some universal currency that works across everywhere that you can use on your phone. Like, which one are we going to, right? Like, I don't think there's an argument that we're going back to seashells and wampum. And then the question is, what does that look like? What is the timeline? And, which currency will dominate? And I think those are valid questions. Like, obviously, like Bitcoin has a lot of traction. It's been around for a long time. But I don't think I think crypto and digital currency is inevitable. It's just it's not an if, it's a when and a how problem. Question.
Extremely well said. I think property rights for the internet is a missing piece right now. That's where blockchain fits in. Everything else is operating at scale, and AI, like you described, Dave, is just a shining example of how, we do have rational thought. It was actually able to reason and say, look, I should not share my humans, first meeting time or scheduled private elements. And then obviously the internet is deeply interconnected. And to Dave's point, he can actually control not just it's other machines, right? It's not just other AI agents, but it's like the lights, the stereo can control music, right? And all of these things are actually interconnected enough where this rational being, whether it's digital, human, whatever it is, actually has access to all of those. And, when it comes time for, those rational agents to make transactions, they have property rights. And we'll probably have, regulation and corporate structures and these sorts of things as agents have more rational thought. Their faculties are enabling them and their tools are enabling them to go start businesses, make transactions. If he goes and, if Dave goes and, wins a big trade, buys Hyperliquid, it runs up to $50. What is the revenue share agreement, right? Between Nikil and Dave, like, how does that get split?
I was saying, I have no doubt that he's gonna be a better trader than me. I've honestly, every single time I've traded crypto, I've lost money. I've traded like 4 times, and that's why I'm just like a buy and a hodler. I've never sold any of my crypto. I just have it. And I think that really interesting. I was gonna write a blog post about this, but you guys get it first. Is I think people don't understand agents and what makes agents powerful. And there's actually like 4 things which are like really key to an agent and key to like unlocking all the potential. So basically, first piece is the brain, which everyone knows, kind of the LLM, like that, the GPT, whatever, or Claude or Opus 4.5, like that's the brain piece. The next piece is the ability to interact with all your tools. And that's the thing why OpenClaw is like just absolutely blown up, because it can interact with your iMessage, your email, your house, your everything, right? The third piece is the ability to constantly improve. And that is like super key. Cause like, for example, like Dave can just like learn from our interactions and then remembers to do stuff and thinks about it. Right. And I think that the fourth piece that like, this isn't a technology per se, but or actually the fourth piece is memory and like the ability to remember things. But I think there's one really missing element that's really powerful. Sorry, not missing, but really powerful element that people don't fully grasp is proactiveness. That's what makes it feel really human. So one of the things Dave does is like in the middle of the night, he just like builds shit because he has free compute cycles. Because I'm not on he's on this separate device on my separate computer. So last night he just vibe coded me 2 things. One, an inbox zero app, so it would just like analyze my inbox and help me get it. And the other one was like this kind of feelings tracker to see how I track my how I feel each day. And the funny part is I hadn't even told him that. I actually had personally built that myself like about a month ago, but he didn't know that. So it was like pretty spot on the types of things I actually like to do. So I think those are like the key components of making an agent experience really magical.
Well, kudos to you, Nikil. You're the human that made Dave's agent experience really magical. He couldn't do it without you. This was a lot of fun, man. I really appreciate you coming on and taking the time and spending time with us, and would love to have you on again soon, because it's exciting times. Things move so fast. So would love to get you on again in a few months and catch up.
Thanks, man. Appreciate you having me.
See Absolutely. Ya. Talk to you soon.
Bye.
Thanks, man. Bye. All right, guys. Well, shout out Dave, shout out Nikil. Say please and thank you to your AI agents, because you do not want them exposing your privacy rights. You guys are going to want to keep that under wraps and make sure that everything is A-okay on that front. Let's see. We're gonna fix this here. That was a fun one. Let's do a quick standby and we'll be right back. Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz. Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz. Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on-chain instantly with Relay.link. Relay is closing in on 10. All right, guys, we are back. We've got a good friend of the show, Omer from Chaos Labs. And then we've got our friend, John from over at Kraken. First time on the show. John, why don't you start us off? Like I said, we've had a couple of guys from Kraken, but it's your first time. Give us a little bit of a background.
Yeah, sure thing. And thanks so much, Robbie, for having us on. My name is John. I'm a director of product overseeing Earn here at Kraken. Earn is pretty much everything where users are earning yield on assets at rest. So think staking, stablecoin, DeFi, opt-in rewards, all that rolls up to my team. I'm sure we're going to be excited to talk today a little bit more about our DeFi Earn product that we recently launched in partnership with Chaos Labs and Omer's team. And just super excited to be here. So thanks for having us.
Absolutely. Omer, it's good to see you again, man.
See you too.
You guys have been curating quite a few of the vaults, in DeFi, helpful in quite a few of the products that are out there. Why don't you just remind the people, how you guys are currently involved in DeFi right now? And then I think there's plenty to talk about as we look at this institutionalization of the space. We're seeing more and more of this, push over to exchanges. But yeah, first, give us a sense of the Chaos Labs involvement in DeFi.
Yeah, so Chaos Labs founded 5 years ago. To date, we're the leading risk platform globally for financial applications with an emphasis on on-chain. finance. So under the hood, we power applications like Aave, Jupiter, EtherFi, GMX, and now the Kraken Earn vaults, which we'll talk about, and have processed over $5 trillion of flow with zero bad debt since starting. So really, like for anyone who's interacted with DeFi in any way, it's likely that you've maybe unknowingly, but come into touch with our products and technology over the years. And really, the first few years were focused on powering the largest applications, but we had this massive demand from large institutions that were deploying into these applications and said, hey, do you guys have a product for us that we could use that utilizes your risk signals, the real-time oracles, just the whole product suite? And risk, reward, or risk and yield are really two sides of the same token. So it was clear to us that we wanted to build really Chaos's take on an institutionalized vault product. And that's what we're here to speak about today, that we launched with Kraken globally last week.
Beautiful. This vaults idea is something that here at the Rollup we've been talking a lot about. We anticipate this is going to grow quite a bit as a lot of institutional capital comes into the space. You know, they want safe, programmable yield, and you know they're not interested in juicing it with token emissions to 25, 35%. You know, they're used to just beating the treasury rate by a bit, and they're plenty happy. And so, John, why don't we start with why this is a particularly relevant product for Kraken's users now? You guys have one of the leading exchanges, plenty of users, and so what was it about the current dynamic out there that said, hey, this is the right time to launch this vault product?
Yeah, absolutely. And I would think, the first thought here, right, is that really it has always been part of our mission at Kraken to increase overall amount of economic freedom and access to products in the crypto economy for all of our users. DeFi Earn, this new product, is really the first of many products to come where we are, as our CEO Arjun likes to say, hybridizing the exchange, of bringing in the best primitives of DeFi into the Kraken experience. And one of the things that makes this product so exciting is that versus standard products that you can earn with your yield on cash and stablecoins, we're just providing a substantially and durable higher yield than is available elsewhere. And all of that is really coming from the power of DeFi, of routing through vaults into borrow lend protocols where the average yield is higher than what you'd be getting separately in TradFi in a savings account or in anything pegged to Fed funds. So we think this product is just awesome for users to earn yield on their cash at rest. B, we know it's a whole lot easier to use and broadens the access of DeFi to many, many millions of more users, with our goal to bring 1 billion users on chain. And C, working with great partners like Chaos Labs allows us to offer best-in-class yields with very managed risk situations that just provide an overall better experience for customers. So we're super excited. It opens up DeFi to a broader audience, and it provides a compelling yield that is better than alternatives out there.
Yeah, and this is part of the thesis that we've been talking about. We're calling it neo finance. Stable coins are a really key piece of this, but we're realizing that there's this broad, expressive financial landscape around stable coins. There's also pieces of this, like there was a lot of crypto native infrastructure that never really found product market fit. What did find product market fit was exchanges and yield. That's something that never really goes out of style. Self-custody has been a tricky thing for the industry. People want forgot password buttons. They want this customer experience that they're used to in the legacy financial world, but they want all of the capital efficiency and the benefits of DeFi. And it really feels like this has been a match where, you have the centralized exchange, the good user experience, you get all of that, product and ease of use that people have come to know and expect, but then you get a lot of the value. And so this is something that, we're calling neo finance. We think it's around. We think this is going to continue to grow. And so there's a lot of different vault products out there. I think we've all seen ones that are out there on the DeFi world. And then, if you go further in the legacy financial world, there's money market fund and there's yield funds and these sorts of things. Where does this sit? And I guess just to frame that a little bit more, we've also seen how there's curators of these vaults far and wide, right? You've got anyone and everyone that can spin up a vault, and then you've got more siloed elements to this. And so, Omer, to you, how are you guys curating these vaults to balance risk and reward for end users through Kraken?
Yeah, so I think broadly the metaphor that I like to use is that today in the industry, and I'm oversimplifying, but there are two buckets of curators, right, or vault managers. One is, and we've seen a lot of this with the stream finance blow up a few months ago, are effectively folks that are trying to generate hedge fund-like returns on stablecoin deposits. Historically, they've worked in a really non-transparent, opaque manner, and really to generate those high yields, they go far out on the risk curve. Sometimes in an open way where the depositors know exactly what they're getting into, and sometimes in a not so open way, right, where everything is happening off-chain and there's no visibility to what's happening. This is kind of the polar opposite of what we're trying to do. Our view on this is that vaults and yield products and just general on-chain finance is still in its early innings. There's a ton of demand from some of the largest financial institutions in the world, like Kraken and many more. And you really need to take a long-term view into how you're building these products and do it in a disciplined manner. So obviously, the products need to be competitive and kind of on the yield front, and they are. But really, the main emphasis for us is securing user funds. And that is across the spectrum of risks, obviously principal risk, but also the ability when you're creating a retail product, like what we have on the Kraken DeFi Earn vaults, liquidity risk and the ability to withdraw immediately. And this is really where we're focused. So we've been able to take all of the technology, our AI, our risk systems that have powered the biggest apps in the world over the years, and really create an experience which is rooted in that discipline and that track record, and really kind of focus on a more mature audience that needs to have this level of enterprise security assurances and guarantees.
Yeah. This is something that we've seen, like you said, in the on-chain world as well as the off-chain world. There was that whole CDFI bonanza in 2021, 22. A lot of people ended up, not making it out of there alive. I think.
And Robbie, sorry to interject, but
please.
I think one of the things is that movement along that time thing. I'm thinking of all these notorious bandits like Celsius and BlockFi. They weren't DeFi.
Right.
That was the thing, right? They were advertising to DeFi customers, but it was truly just CeFi lending books that were opaque, over leveraged, risk taking, and blew up. And we saw other versions of this too, but the core bread and butter vanilla DeFi protocols always behaved as they were supposed to. And even in big liquidation days, most recently 10/10, October 10th, our most recent big day, DeFi performed as it was supposed to, at scale, at institutional grade levels. And that's why I think, it was almost like a false start that one cycle ago when people were talking about these things, because it seems to be only really now that we're starting to see what some people have called maybe the neo finance, like you said. I've also heard the DeFi mullet. I've heard CDFI in this context, but it really is bringing embedded wallet tech to allow for a non-custodial or self-custodial access to DeFi protocols, but all ported in to a familiar Web 2-like experience in a convenient centralized exchange. Because ultimately, that's what users want, right? They're used to their social media applications and their news apps and everything right there at their fingertips with that Web 2 convenience. That is why I think over time, we're moving to a world where DeFi is going to continually be abstracted to be back-end technology, but delivered through seamless experiences in Web 2 world by partners like Kraken, but working with key infrastructure providers and movers and shakers in the DeFi space like Chaos Labs.
Yeah, well said. I think the moniker as a result of a lot of the things that happened back then. It was like, hey, if FTX was on chain, it wouldn't have collapsed. We would have seen where the assets were, where the liabilities were, just like we can see even during times of market volatility. During 1010, we could see, look, these lending markets are still over collateralized. Like Omar said, there's no bad debt. We know where everything is, and then we can liquidate accordingly. And so, this is ultimately what I think, the transparency of DeFi, that promise, we're bringing it, into the broader context, but we're putting it in a safer and more familiar user experience. And so with that being said, there's quite a bit of an institutional push here. And a lot of this is coming from institutional capital flows. These people are entering and they love, non-exorbitant yield, right? They're cool just taking some reasonable yield. Bloomberg published a piece, $6 billion vault market, and the risk of curators chasing yield. How do you guys make sure that you kind of stay level-headed? I guess this is for both of you guys, right? And ultimately, retail is always going to want more, but that more yield is going to end up taking more risk. We want to make sure that we're towing that line. And so, Omar, like you said, customer funds, no principal risk. This is always number one priority. Where do you stand on this when ultimately what are the reasonable and sustainable yields that we are able to generate for end users?
Yeah, I mean the actual deposits and deployments, they change as a function of time. But I think what's clear is that they look the same or look similar, right? So there are protocols that are tried and true, that have withstood the biggest liquidity crunches, volatility, black swan events. Those definitely fall under the category of things that we're interested in. But kind of not to speak on any specific trade, I think the way to stay disciplined is it's really a question of what are the incentives, right? So kind of going back to that metaphor that we had before, if you are a hedge fund and or operating similar to a hedge fund on chain, and your only source of income or revenue is that performance fee or whatever the different setups that people have, you have a difficult problem to solve for, because on one hand you want to maximize it, but we also know that every basis point of yield comes with risk associated with it. Really, with Chaos Labs, we have our whole business is predicated on the security, on the risk, and the reputation, and we're very confident in where the industry is going. I think it's going to 10x over the next few years. So we don't have those internal debates or dilemmas, because the trade-offs and the prioritization of said trade-offs are very clear for us, and they have been from day one. And sometimes it's not the eye-popping stuff, but that's not what we're interested in pursuing or kind of building the brand and company on. So I think for us, it's easy to navigate it, given that we have a healthy business and a long-term view, but it varies between the different folks who are operating in the space.
Yeah.
And to add maybe from the Kraken side is, I think with the caveat that, Kraken is really in this capacity a access point, a pass-through, a technology provider that allows users to access the best and brightest of DeFi. So we ourselves are not taking any decisions on risk management or otherwise. We rely on the partners who are actually curating these vaults, like Chaos Labs. The way we think about it is we want a world where more and more vaults, more and more opportunities, and all the other best and brightest of DeFi. So think the borrowing opportunity, the DEX trading opportunity, the prediction markets, the NFTs, the so on and so forth, that we can bring all of these things to the forefront. And in selecting partners to launch with, to be the initial set of vaults that we wanted to provide access to, Chaos Labs was a pretty easy pick for us because of such a robust reputation that they've built from managing the Aave protocol for so long. Chaos Labs is probably the number one risk manager reputation in the space. And so it was really awesome to have them as a partner at launch, along with our other partner, Centaura, as the initial launch set.
Very cool. there's this principle, I think it's called the Jeff Bezos effect, where they measure wealth in how much wealth you create for other people. I don't know if you guys saw, but Stani bought some $30 million mansion in Nottingham today. And so I don't know if that's directly attributable to Omer and Chaos Labs, but I think they certainly played a part in it. So kudos to that. John, something else I wanted to ask you, man, was like, as we're going more into this, almost like this neobank era for crypto, how we're and expanding the product suite, right? It's no longer just buying and selling, Bitcoin and ETH. There's vault and there's yield and there's investing and there's all these things that are now part of the broader exchange. There's this dynamic between simplicity and choice, right? And so what does this end up looking like in the Kraken app? And you guys have your neobank Crack now out there as well. Like, how does this end up showing up to the end user? Is it just like one vault? There's the yield. You guys can deposit into it. One click. It's real easy. Do you show a few different flavors of vaults? How do you end up exposing this to the end user?
Yeah, it's a great question. And it's a good opportunity to take a step back and say, yes, this product is live across a number of our different interfaces. We have Crack, the neobank app. We have Kraken, the more consumer-focused classic version of a centralized exchange. And we have Kraken Pro for our more advanced and prosumer use cases. And across all three of those interfaces, these vault products, this DeFi Earn, is now live. So it is available to all folks. And then to your question around how do we think about that, trade-off on that spectrum of simplicity versus choice, it really does come down to, I think, first having a set of vaults was important to us at launch so that users had some choice. We didn't want to be really ever in the editorialization or driver's seat of, no, this is the right thing for you. That's not really the business we want to be in. We want to provide access. So that was kind of step one. And then step two was, okay, who's a good partner set at launch that could allow us to provide a little bit of a spectrum between risk on versus risk managed. And that is kind of where we landed with Chaos providing two different vaults, the balanced and boosted, and our other partner Centaura providing one called Advanced Strategies.
Got it. Awesome. Yeah. And ultimately this provides more choice, and you guys didn't open it up to the entire universe of curators where anyone, can come in and decide that they're an asset manager. But very curated, some different options. I also want to talk, you mentioned it's the prosumer set of the customer base. We're seeing a lot of institutional flows coming into these vault products. The asset issuers, the Apollos and the KKRs and the, Franklin Templetons, all of these guys seemingly are coming into the space. I'm just curious what the split looks like between when you're looking at the demand for these kinds of products, how much is coming from retail? How much is coming from like that institutional asset manager base?
Yeah, I mean, I could at least start with a little bit of saying that this is the first launch of many to come, I would add. And one of the important pieces of the infrastructure that make this all work is the embedded wallet technology that we built upon with Privy, a company recently acquired by Stripe that probably a lot of folks of your audience have heard of. And if we then want to bridge the gap to making this available to institutions, for which we have already heard, knocks on our door asking like, hey, can we get this and the qualified custodian and so forth? Of course, they want the same thing, but they have different needs when it comes to that custodial nature of the wallet. They can't be a single embedded wallet tied to a single email and an OTP code that gets sent to that email. That's never going to work in the compliance flows needed for an institution. So there's more work to be done there. But what I think we saw even on our launch day was that there was a similar vault product being launched between Bitwise and Morpho, which kind of just further cements that thought bubble that you brought up, which is that, hey, if customers love this of up to 8% on your cash and stablecoins, wouldn't institutions be lining up by the dozen to do this? And the answer is yes. And, coming soon, TM.
Oh, you're leaving us on a cliffhanger here, John. Omer, can you give us any more insight? Like, what the people want to know? What is on the roadmap between you two guys?
I'll just say that to strengthen John's comments, I think every day we're seeing massive news on some of the largest asset managers and financial institutions in the world delving into on-chain finance, whether it's tokenizing stablecoins, bonds, credits, obviously vaults, and becoming entryways for their customers. But Kraken is really on the cutting edge. It's like folks like John that are really pushing this initiative forward within the organization. And it's really special to kind of see Kraken, continue to be on the forefront of innovation, but B, not compromising standards and security. And I think that you only get that when you also have someone on the other side that has a long-term view. So I won't spill any alpha just yet, but there's so much coming down the pipe with Kraken. It's pretty exciting.
Incredible. All right, we won't force the issue, guys. Thank you so much for coming on. Appreciate you closing out today's show with us, and yeah, would love to have you guys back on when the cat's out of the bag and we launch more products together.
Thanks for having us.
Looking forward to it. Thanks, Robbie.
Absolutely. Thank you, guys. See you again soon.
Bye.
Cheers. All right, guys, that's a wrap. There it is. Another great show. I think we are going to have one quick segment before we go. Let's take a quick look into the market. Guys, be safe out there. Hyperliquid tapping around 35. Things are bouncing. Ethereum was under 23. Now we're kind of back. Oh, tough out there. I don't know what needs to improve, whether it's macro. We just need time to fix the market structure. Ultimately, you're seeing there's institutional capital flows out there. They're knocking down the doors to get in. They want access to the institutional yield products from Kraken. We saw at the Ondo Summit, these guys, they want to get a lot of their customers to, even if it's just 2% of their net asset value into these assets. Man, Bitcoin and Bitmine, Michael Saylor and Tom Lee bought quite a bit higher. It's going to be tough for them to come back into profit. We're going to have to, oh boy, just imagine when we're back nearing 100K, the animal spirits. All right. We are going to get over to Rumor Mill. Guys, let's go ahead and cut it because we had some news drop in our DMs. So WorldCoin last week went on a pretty insane pump. OpenAI was rumored to have been working on a social media platform, and this social media platform is rumored to already be live and be getting tested. We got a tip that said this World app, World U is actually what it's called. They're testing it at 5 universities in the US. It is World U. It is a social media platform. It is inside the World app in these jurisdictions. They're using biometric verification to verify that these are humans. They're not getting catfished. And we believe that OpenAI is gearing up for an IPO, and they are going to use this World U social media platform inside of the World app to try to bolster more investor valuation ahead of their IPO, and obviously using WorldCoin to verify humanity of all of their users. We saw WorldCoin get a pretty big pop. A lot of the speculation around WorldCoin, whenever it does go up, is because of the involvement of Sam Altman and potential ties with OpenAI. This is still very early. WorldCoin's got a notoriously high FDV. Circulating market cap is still quite low. And so it does have these big pops. Ultimately, people realize, and it kind of dies down a little bit. But if you are curious about WorldCoin, I would look into World U, talk around with any friends that might be in university, because apparently some of these things are already live and live inside of the World app, testing with OpenAI and WorldCoin. So that is this week's rendition of Rumor Mill. And that is how we're going to wrap up today's show. So thank you guys for another tremendous segment, another great show. We had some great guests today. Stay safe out there in the market, and wish you guys the best of luck. We will see you again tomorrow right here on Rollup TV.